Hey people, thank you for stopping by at Building Wealth with Rajiv. Here's my fun chat with two Palantir experts. Palantir may not be growing as fast as Snowflake, but there is always something controversial to talk about Palantir. And it's always good to gossip about Palantir. So we talk about the recent Q4 earnings. What is stopping Palantir? Are there execution risks? Number three, is it investable? Is it worth investing? Is it worth your hard-earned money? And number four, is Palantir next Tesla? I hope you like the chat. If you like the chat, please subscribe to the channel and help me build the community. Hey gentlemen, thank you so much for coming on. Really appreciate both of you are Palantir expert all over the Twitter. People follow you, appreciate you, and loved your videos, Sachin. Congratulations on your YouTube channel. So earnings, how was it?
Francis, you go first.
You want me to go first?
Okay.
We throughout the video we could talk about different parts of the earnings reports. But overall, it was okay. It was good. Could it have been excellent? Could it have been great? Absolutely. Were the things we could have desired for sure. However, overall, it was a generally good earnings report. They're making lots of really good progress on the commercial side of the business. Unfortunately, we did see a bit of a slowdown on the government side of things. But in general, there were lots of really good positives from the commercial part of the business that gave me some good confidence that the thesis is mostly still intact with the company, and it hasn't primarily broken in the meantime. So overall, it was a good report. And yeah, I'm happy to go. We could touch upon different details later on in the call.
And what's your view, Sachin?
No, I overall like the earnings. These are not the earnings I would completely go ballistic about it. And I'll explain the reason also for that. See, overall, if you see the earnings, the first thing I check in all the earnings is whether they are consistent with what they said. So if you go back to the February 2021, and they said that this is their mission, they want this 30% growth, they're expecting 40%, and they want to increase presence in commercial. So they met those milestones. Okay, so I think the company is consistent with their mission. Why I didn't say that it was ballistic, because my reason for investing in Palantir is that I believe that this company will at some point will take a fork up and will become a kind of a juggernaut. Whether it happens or that, I don't know. That's the risk in the execution. So question for me, or risk in Palantir for me, is that will Palantir become a niche company, or will Palantir actually become a juggernaut? If I take the current path, it is on path to become a good niche company. It is yet not taken the path to become juggernaut, though it has a product that has the potential. Okay. So I am expecting that getting a product in this category is more difficult than getting the business model right. However, business model and sales is also important, but I believe with the guidance of somebody like Peter Thiel, they can actually crack it. But if I take the current path of Palantir, it is on a path to become a good niche company, and earnings were in line of that. What I expect them to beat earnings by a huge margins quarter on quarter, only then I will believe that whether they have the potential to become a juggernaut. So potential, yes. Direction, good company, not to be in juggernaut category at this particular time, as per my assessment.
But I think brilliant breakdown into a niche company in juggernaut, like a management consultant. Sachin, you've been a management consultant, so that's coming in handy here. So what does it take to become juggernaut for this company? Beating earning is enough, or are they missing something?
So let me take this one, Francis, first. Okay. When I say like beating earnings, as far as earnings, EPS is something which I don't care too much. I'm focused a lot on capital deployment and capital generation. So what is more important for me is how the revenue is growing. I'm very interested in top line growth. I'm very interested in the operating margin, and I'm very interested in how much capital has been deployed back in business in the growth phase. If you do that, your earnings will eventually suffer. And a lot of time when you see from a GAAP basis and non-GAAP basis due to SBC, which has been quite significant for the company last year, it could be missed. But capital deployment, total like they have no debt, good cash. I mean, eventually companies with these kind of characteristic will figure out the earnings as well. Over to you, Francis.
You're on mute.
Sorry about that. Yes. Yes. No. I totally echo what Sachin as well said. That could you guys hear me well?
Yeah. It's good.
Yes.
Okay.
Okay.
Come on. Carry on.
Good. Okay. No, I totally echo what Sachin said. In terms of great. That's the parts where we say Palantir in it of itself, the technology, the product is absolutely phenomenal. I mean, they've built, I always call it, they've built the full AI stack, right? All the way from data integration, the foundational components of what you need for a machine learning model, whatever. You have the foundational components from data integration, security components, analytics, machine learning, your core modeling, as well as the visualization. Like Palantir's position across all of those. So from a product perspective, they're phenomenal. You know, they've built a phenomenal product. And even on the earnings call, Alex Karp talked about the fact that they've built their presence in the government, like within the US government. Their product is premier within the US Army, security forces is the premier. So on the product side, phenomenal, and they've built their moats. However, to become a juggernaut, to become a phenomenally great company, you need to both conquer both the government side as well as the private side, the commercial side, or your Fortune 500, Fortune Global 2000 companies. You need to conquer that. And the best of the best companies, your ServiceNow, your Salesforce, your Workdays, those legendary SaaS companies that we look back to, they conquered both of those sides. And now Palantir has done a phenomenal job on the government side, and no one's actually going to take that from them, at least not anytime soon. Now the question is on the commercial side of things, you know, how quickly are they going to pivot and move over to that side, you know? And so that's why I mentioned they made good progress, you know, and something that's very important for investors to understand, and we have to be patient with them, is the fact that Palantir has been in existence for over 15 years, but they only had a sales team, like they really only had an official sales team within the last 3 to 4 years. I mean, that's unbelievable, quite frankly. You know, I mean, think about it, like every company has a sales team from the beginning, right? And so it's a fairly new sales team, and now they need to capture that commercial side of things, you know. And so it's going to be a challenge. It's going to take time, but their ability to conquer that side of things and make their product a phenomenal product, as well as like your Salesforce has done, and even Snowflake. I mean, even Snowflake is on target, or the estimate right now for Snowflake are to do close to $2 billion in annual recurring revenues this year, and growing at a rate of close to 100%, right? Like, I mean, so Palantir's revenue, the current estimate, if you annualize the guide, they gave a guidance for Q1 of 30% growth or somewhere about that. If you annualize that over the next 4 years, that's actually what analysts estimate is about $2 billion, right? But still, they're going to be growing at only about 30%, right? You know, and so there's a big difference between where Snowflake is at as opposed to where like a Palantir is, you know. But it's that other side of things, and we need to see that growth side of things, and to show that it could generate good earnings, as Sachin has mentioned. You know?
Yeah. So I think, look, I'll go back to Sachin now. Sachin, you've been a management consultant, worked with so many CEOs and entrepreneurs. Now let's talk about S curve. You know, and this is a question, impromptu question. On the S curve, where is Palantir? Is it kind of a, where is it missing? Is it missing on execution, or, you know, typically you've consulted the growth companies. So look at all your experience and successful growth companies. Where do you see Palantir is? Is it top 10% or?
In my view, is Palantir is in a very early part of S curve, and I'll explain why. And the reason why they are still there, and to be fair, they have been there for longer than they should be. I think this is a criticism. They need to accept it also. And like Francis also said, and we discussed with Francis also in past. See, they have been a bit reckless and arrogant about building Salesforce in past. So they have to take criticism on that. And I was very happy like when Alex came and accepted it with humbleness that yes, we should have done things. Okay, because things happen in a certain way in B2B. See, if we see the world of AI, okay, and for the time being, like if I quote even the US government, which is planning to invest like almost 25 billion, their own money in AI, and this is like one entity, okay, and then you look in terms of the all the organizations. I'm talking money to be invested. I'm not talking value to be created at this particular time. The AI alone investments are going to be of the order of 300 to 400 billion in next 3 years, and that is known. Now, the thing is, when you make and commit investments in terms of AI, see the thing is people are selling limited dreams. Okay, that means if you put a budget, you have to justify your budget. Your face is on the budget. So people are actually conservative. But when they will start seeing the results and the value is created, this is going to increase. So what we are looking at TAM of almost like $1 trillion in this segment as we are moving into 2025, 2026. Okay. Now, when you see a company is raking a revenue of 1.5 billion, I mean, they are nowhere at this particular point. As Francis rightly mentioned, that even with a thinner solution, Snowflake has made tremendous gain in terms of at least acquiring new customers. We can always argue, and I always argue that their model is different, their barrier entry for different, but that's the choices they have made. That's how they built their product. I mean, it's like this is what the business model is. They made certain choices and they are helping their choices by their business models and partner ecosystem. So for example, if Data IQ goes to somebody to sell their data analytics platform and somebody likes it, then people ask them, okay, what about data layer? Or they say, oh, we have Snowflake as a partner. So Snowflake doesn't have to be in room to sell a lot of time.
Okay.
Okay, and I know this very clearly because I was in Schlumberger. Even I led their digital strategy at least for some time. And Data IQ is something which has a close relationship with their partner with Schlumberger in terms of data analytics. It's a nice company. So what is happening? This is what I call multiplying dollars. That means Data IQ is spending money on their Salesforce, and it is generating revenue for Snowflake. This is brilliant. Okay, this is exactly something Palantir has to replicate. And I see the example that could likely happen is between them and AWS. AWS has been a better partner for them, at least in big tech, compared to a lot of other like Microsoft or Google. I mean, they work with everyone, but as a company, they are very critical of Google. So I do not think Palantir and Google becoming strategic partners. Now, AWS has the largest cloud market. But somebody who is working in cloud market that also knows that working with AWS and all the solutions, it's like juggling 5 glass balls in airs at a given time. Now, Palantir has a capability that can reduce those 5 glass balls to 3 rubber balls and make life easier for some of these. And if you remember, like one of the concept with CodeStep and I discussed, that is idea of like software service of Palantir Cloud, which can sit on multi-cloud. Okay, that is something I would see can happen, and I would expect AWS to become a more strategic partner with Palantir moving forward because they are complementing each other very well. Back to you guys.
So, Francis, question for you. What Sachin is saying about they're too early in the S curve and they've been there too long. You agree with that?
Yeah, I absolutely agree because as you guys have seen, they've done this in the government, right? We talked about this, how they've been so focused on the US government and capturing all the different state departments within the US and making sure that they just capture that section for such a long time. And so that's one way of looking at it. I think the other way of looking at it too is just from the capabilities of the technology. I mean, we still haven't, I mean, yes, we've seen the fairly good early versions of what machine learning, artificial intelligence could do. However, there's still a lot more capabilities that the world could see from just the world of machine learning, artificial intelligence. I mean, we haven't reached that final part of the S curve, right? We're still very early in this technological adoption for both companies, businesses, individuals, and just society in it of itself, So I totally agree. So from a technological point, I could say actually Palantir is quite advanced because they have a pretty advanced technology. Not everybody has a phenomenally AI stack, right? An AI developed technology that's able to help you from the foundational elements of your data storage integration side all the way to developing a data science model, right? Not many companies have that. That's one side of things. And so Palantir has done a phenomenal job and they have a great technology. And so on that Earth curve, Palantir is actually quite above advanced many machine learning and data science companies. I mean, there's no doubt about that. But the second side is it's not worth if you have a good technology if you're not able to sell and commercialize it and get it out to market as quickly as possible. And that comes back to what Sachin talked about the channel partner ecosystem partners, right? Like, so you need those ecosystem partners to be able to help you sell your product. Like what he mentioned about Data IQ. It's the same thing with companies like there's a private company called Data Robots. There's companies like this that are in that data science world, whereby they're offering kind of similar services to what Palantir does, but it's very easy for those companies to sell those products easily, But Palantir doesn't have as many of those channel resellers or partner ecosystem partners to be able to help them sell those products, So it's definitely a challenge, but it's something they're working through right now.
I think sometimes I agree with both of you. I think their ambition on product side is amazing, that they want to create a world-class product, a life-changing product. But their ambition on the commercial side, I'm talking not government commercial, but revenue side, for example, that isn't really very ambitious. They want to grow 30%. I mean, it's not really ambitious, is it? I mean, or they're trying to sandbag the market. I don't know, but they don't exceed the numbers by that much. So I just think they're not being ambitious.
They are sandbagging by a huge margin. Either they are sandbagging because they want to throw good surprise, or they are sandbagging because they don't know how long they will take to sort their internal issues and their go-to-market channel working in different. That is, I don't know. And that is why I say that in Palantir, execution is a risk. In Snowflake, valuation is a risk. Okay, so that is something we have to, both are great companies and both are going to stay around and both are going to become quite significant, especially in the enterprise setting moving forward. They are not going to disappear. I think this is one thing people miss. People think what we are discussing about this thing, they will like, oh, Palantir will go bust in 12 months down the line. No, Palantir is not going busting down. They don't have any debt. They have cash. They have revenue growing. They are not going anywhere. They'll be here 5 years, 10 years down the line. Oh, Palantir will be acquired by someone. No, Palantir is not that easy to acquire because their founder share structure gives pretty much 3 or 4 people right to decide whether they want to be acquired or not. So you need to understand this. This is what a lot of executives I talk, they miss. I said, guys, sometime, I was in this discussion with a board meeting and somebody was showing me this company and they said, okay, we are going to build a partnership. I said, is your executive management aware about it? They said, what do you mean aware about it? You are going to build a proposal to them. He said, yes, we are going to build a proposal that this is going to be a data partner. He said, does your proposal contain what other companies are in the market and which you are not partnering or considering? Because your executive management has to understand that when you do this deal, you are closing certain doors and there are going to be outcomes of that. Have you compiled it? And there was no answer of that. So that is something why this person doesn't think that was necessary, because he had no clue what Snowflake does a lot of time. He has no clue what Palantir does. He got a proposal. He think it's I said executives are in dark a lot of time because they are not able to see that my action will have counter reaction from my peer groups. And that is what a lot of people have to understand as well. So as we move forward, companies will get more and more visibility. See, think from this point of view. And I mean, I have met people from Palantir, and I have asked them hard questions, and I have asked them, okay, what's your value proposition, and why should I work with you? Like in different, see, their value proposition is time to value, and time to value matters more when you do not have, when you are already in trenches. And the reason you are going to be in trenches, because either you are doing a lot of mistakes or your peers are doing far better than you are doing. So as long as Palantir ensure that in a sector they can convert their clients to be more efficient and profitable related to their peers, I think that is going to create that snowball movement for them. They have not yet achieved it.
And you're on mute, Francis. What's your view, Francis, from an analysis point of view? You look at so many companies, Francis, and analyze them. What do you think? The 30%? I think it's pretty conservative. I mean,
yeah, I mean that's how Wall Street works. You know, it's the way Wall Street works. I mean, you provide a low beat, you provide a low number so you could beat it, right? Like whenever a company gives a guidance. Generally, whenever they give a guidance, they're giving you the lower side of what they think they could achieve, so that when they come over it, they beat the estimates and they beat and they raise their quarter. Everyone cheers them on the street, right? Nobody ever wants to say, "Oh no, you came below your estimates," right? Or you became below your numbers. So I mean, obviously, the numbers are fairly conservative from what these guys are doing, what Palantir is giving. But however, we still need to see the execution, right? Like, I mean, this year they didn't even give revenue guidance for 2022, which is like a little bit troubling, because I'm like, why didn't you guys give your guidance? Because usually Palantir makes sure they give guidance and they kind of guide the streets on what to expect, but they didn't give a guidance this year. So those types of things, I know obviously the guide for Q1 2022, it suggests maybe a 9 to 8% beat, which is fairly okay, but it's hard for us to extrapolate 5 years from now to see, you know, what could the company actually do. All we could do is to just say, okay, let's take the current numbers from now and then use that to extrapolate going forward, you know. And so if we compare this to like the likes of like your Snowflake, for example, Snowflake went even more ambitious. Snowflake gave an ambitious target of 10, I think it was what, $10 billion by 2030, I believe, because I believe they gave that estimate. So that actually says they think they could even grow for 30% over a 10-year period. Like, think about that. Like, so Palantir is giving this for only 5 years, but then they're giving their own estimates for like way out, you know. We know about Databricks. Databricks is another analytics company. Databricks actually gave their estimates. They gave their numbers. They didn't give an estimate. They just gave their numbers from 2020. No, sorry, for 2021. And Databricks grew the ARR by close to 80%. That was their growth rate, you know. If you want to maybe compare it to Confluent, which is another, not necessarily, but it helps data analytics companies as well, right? They grew maybe close to 60 to 70%. However, we know that's on a smaller scale that the company is going for. So when we compare this across many companies, definitely it's very low. So you're absolutely correct. It's fairly lower, you know. But I think it's definitely something they could achieve and beat. But many want the very quick thing. Let's just even look at the commercial numbers, because it's going to be the commercial side of things. Because from this quarter, we saw what happened, that the US government growth decelerated. And actually, that's kind of worrying to everybody, because we always felt like the government deals were like what gave Palantir their foundation, you know. But seeing the government growth decelerate, you know, it's a lot of concern, because it could mean is the government, you know, maybe the government mostly spent a lot of money on them during the pandemic, right, for drugs and all of those things. And it just worries, because the growth decelerated from Q1 2021, government revenues were growing by 76%, Q2 66, Q3 34%, Q4, and this most recent 26. So think about that, from 76% all the way to 26%. But I mean, we know the comps are difficult because in 2020 and in 2021, the government, because of the pandemic vaccine distribution, they spent heavily on Palantir. And so now it's getting a little bit harder because obviously those contracts are probably not coming up as much. So that's one thing. And then very, very quickly, just before the US, on the commercial side of things, we know the growth accelerated, which is good. It went from 72% in Q1 all the way to 132 in Q4, this most recent one. However, this is not the good news, is actually the growth, if you remove their SPAC investment, so all the SPAC investments that they actually made, the growth, the US commercial growth was probably around 80%, not 132%. So it also kind of gives you a little bit of pause because, and that's why we saw the decline. That's why the price declined, because when you look very closely, the numbers are not like, it's not what we expect to see from an AI company. So there's work. They have work to do.
So I think, let me ask a direct question to both of you. Why are you guys still invested in Palantir? I mean, there are ifs and buts. And I know with any growth company, right? And right now, I think a lot of growth investors, including me, are bleeding, but we have a hope that things will turn around. And I'm sure they will. But why are you still invested in this company? I mean, why are you not putting your money somewhere else?
So let me take first on this one.
Sure.
See, I have two views on the company. I mean, I know the sector. My understanding is when the sector macro is this hot, even the average companies grow. Okay. So even if Palantir failed to become how we expect it to become a juggernaut, a very good company, the macro will still carrying it. That's my bear case scenario. The second thing is that if Palantir goes into like that, I mean, I will use Palantir position mostly to sell my covered calls as much as possible, because given the volatility and being a tech sector growth, you will have good implied volatility and you still milk up money, you meet your expenses until and unless you get a better opportunity to spend. So this is my bear case scenario on Palantir. My base case scenario on Palantir is that Palantir will eventually figure out business model and sales, because that's an easier thing to do in a mature industry where a lot of people can actually help you. And I have seen them on ground, like what they can do. So let me give an example. Palantir deal with BP was, as quoted in public sources, so I will not quote anything which has I heard anywhere else, was around $100 million a year when it started. It started when the oil price was nearly $100. When the oil price was $100, companies were spending money like anything. I know this because I was leading major capital projects. That particular time, the biggest software services agreement between two companies, that means the company which is spending the most money on softwares in oil and gas and the company which is getting the most money. So the agreement between these two companies, which was the largest till date, was 70 million. So this company starts something which was already 40% above than any standard market has set. And BP, so you could say BP is making a mistake with them. But then BP sticks with their investment. And eventually, when BP changes their strategy to go to renewables, BP says, you know, we want Palantir to be the partner with us. So, and BP had an exclusivity with them for a long time. So on ground, they have proven what they can bring on table. I spent time discussing with several of the people who are in BP, who have seen it. I spent time with the CDO of BP, who was there, who was implementing it. When I was in Shlambajar, he was in the same team. We practically had the same boss. So, I mean, we had discussion over beers. I mean, he showed what the concerns, but what concerns he had, what he learned from it, and how much he admires the company. So overall, I mean, I felt, that this company could be something. Okay, this really, and on top of that, you know, you need to find this ambition sometime. So they do not have revenue ambition, but their ambition is very clear that if you are that vocal against Google, that means you are going to go against Google at one day or day. This showdown will happen. You like it, you don't like it. It's going to be a David Goliath, or it is going to be something else. We don't know that part, but it is going to happen. They are very vocal. And in this particular case, I think I would like to go with Palantir than Google. I mean, Google is a tough company to compete, but somebody is taking Google by hand. I mean, really want to see how it goes. So that's my theory.
And what's yours,
Awesome.
Francis?
Yes, it's a really, really good question, because one of the things we didn't really talk about is obviously the profitability issues, the stock-based compensation issues, right? But encouragingly, the Alex really talked about it on the call and talked about the fact that they're going to reduce it this year, and we should expect to see, because the core business itself is quite profitable. The free cash flow, the operating margins of like 24%, free cash flow is close to about 24%, gross margins are relatively high, but you need those stock-based compensation on a GAAP basis for them to be profitable. And so I hope, my hope is we're going to take him for his word, and this year we're going to see that come down in the book. Fundamentally, with Palantir, I think my thesis just really comes down to, and I always talked about it, the only reason why, because usually I would have sold out of this company, but I'm giving them maybe about 2 to 3 more quarters over the upcoming year, because number one, I still believe the technology they have is quite hard to replicate. Not many companies, every company in the data and machine learning space specializes in one area. Snowflake storage, compute, data warehouse, like data robot or data IQ that we talked about, the data science part of things, Databricks, data lakes, like all of these companies have different specialties, but Palantir's technology is capable of doing many things across that supply chain. So it's kind of like an integrated solution. And so for companies who don't want to buy, who don't want to spend a lot of money on hiring an engineer, a data scientist, a software developer, instead of buying so many staff, you could just get Palantir to provide you a custom solution and just supply you with what you need. So a custom solution is the bet on Palantir. And I think there's still a good market. The total addressable market is very big and the technology is good. It's one of my reasons. I think where I'm going to be watching them over the next coming months is that sales, right? Kind of what Sachin talked about, the go-to-market execution. They've talked about the fact that their sales rep, they mentioned on the call, they have about 80 sales reps or something, but those sales reps are still yet to spend a full year. And so we're waiting to see how long those sales reps come up on the job and start selling the product fully into the commercial side of, because that's where we're going to see the growth come out from. So we need to see how they execute on both their channel ecosystem partners as well as their sales team over the next, and we need to see the growth, especially if you remove the SPAC investment. We need to see the organic growth of the commercial side. And I think I believe the management team is extremely brilliant. Palantir, Alex, and all of them. I believe these guys are capable of doing this. I think we need to give them a little bit more time. So that's where my go-to is, like, we're going to give them more time. However, if by the third quarter, the second quarter of this year, we still see maybe growth is declining and things are not working out, then it's like, okay, is there a better place for me to put my money in at that time? Because I think it's important. We need to scrutinize the company. So that's where my thesis is: management, good, strong management, good technology, great product, a great market, early stages of AI. These guys are capable of doing it. So it's trusting them now, but it's losing me money. But I think it's possible. But if they don't, I might just be forced to think elsewhere.
Okay. So I think that's a fantastic thing on your thesis. Now, let me give you a situation. I need some advice from both of you, Francis and Sachin. I'm a fresh investor and I have choices. Yeah. I have Palantir, I have a Snowflake, I have a Datadog. Yeah. I have other companies Francis talked about. What should I do? Where does Palantir stand for me? I know you guys invested some time ago, and conviction is there, but I'm starting fresh. What's your advice to me?
So again, like what we are going to give as an advice, it's a hypothetical advice, not financial advice. Okay,
sure.
so let me just put it that way. See, there are several things you can do. Okay, I mean, like if it's a fresh investor, the first thing is you say that I don't know much about technology. Let me find something which is a low risk version of these companies, slightly mature version. That is one thing that can be done. The another thing is that you take, okay, these three companies are good. I don't know which one to differentiate. I put 1/3 in all three of them. That is another way to do it. Is okay. Another way is that you are really good in identifying companies and you make a choice that it is going to be Palantir, Snowflake, or Datadog, and you make a choice, a weighted point of view. Another thing is, which is like you say that, like I said, Palantir has an execution problem, Snowflake has a valuation problem. Somebody can say that these companies have divergent in valuation. So you go long on one and you go short on another, depending on. So this is another like something, if you believe in that kind of thinking, it's a very risky strategy, but and you need a very hard convictions to do it. But these are like different things to do. But there are some very simple questions you could ask yourself. That forget the name of these three companies. Are we going into a growth period of technology of AI, IoT, data cloud? That is first thing. Is there a good, strong macro? Because if a macro is strong, eventually you can make a wrong bet.
There's a tailwind.
There's a tailwind there. Okay. The second thing is you try to see that which company is more consistent in meeting what they are saying. Listen what they are saying and what they are doing, and listen what their customers are saying. Forget what analysts are saying. Forget what I am saying. You are saying, Francis. Listen to their customers. And you know, in today's world, you can always connect with people one way or other way, where you can get. I mean, there are a lot of talks on YouTube. There are a lot of articles that company publish in their blog. So you can make. And if somebody says that after doing this, I still don't know what they do. Sorry, bro. Investing is not for everyone. There.
Go ahead and find the index.
Yeah.
VOO. What do you think, Francis?
I agree. I mean, yes, I mean, those are all the different strategies for somebody who is new to investing and thinking about where do they want to start. But I think for me, I think how I would approach it is, if I were a new investor and just had no clue where to start, I mean, I would definitely say go on the safer side for now. Try out the safer side, and in this scenario, quite frankly, if you're looking at companies like Snowflake, Confluent, Palantir, and the likes of those companies, definitely Palantir is the cheapest in terms of evaluation from a risk reward perspective, right? And so, if I was somebody who, they didn't know about technology, they didn't know about anything, big advice would be go obviously with Palantir right now, because it's a much more well-established company. I mean, this company would never fail. I mean, with the billions of dollars which they have in contract values, the kinds of contracts they have with the government, like, we know this company is not gonna go to zero, number one, and it's never gonna stop growing. It's gonna keep growing, right? The question that we're really just having a conversation today is, how fast could they grow? And being able to grow quite fast, quite frankly, is a reflection of a good product, a good strategy, a good execution, a good go-to-market strategy. It comes down to product, go-to-market. And so if I were giving somebody, definitely start out with those companies, start out with maybe a Palantir. However, I would say if you're looking for the most highest quality company and you are interested in following the companies very actively, Datadog is like, that's the best company, quite frankly, in the SaaS. And I actually think it's not only is it the best SaaS company right now, I think, and this is a controversial tweet, but it's like within the last maybe 7 years or so, I think that's the best SaaS company out there, because this is a company that's GAAP profitable. It's profitable. They're not increasing their sales and marketing expenses as much as their revenue growth. They're growing quite rapidly at an extremely profitable rate, generating significant amount of cash flow in only 1 quarter. The technology is phenomenal. The technology product is great in the sense that it's currently one of the better products in their industry. They're capturing customers. I mean, there's nothing you could say about
80% plus.
Yeah,
80%
they grew
plus.
80. They grew 84% last quarter, and they're guiding to grow this year by 71%. And so dollar-based net retention rate is 130%. So I mean, you're looking for the best in class. There's nothing close to Datadog. The only thing would just be you just have to follow it very closely because with the valuation, it trades at a premium valuation, and so what that means you have to follow it very closely in case if a huge drop in revenue, exactly, you need to be ready to sell out unless you're gonna find yourself with multiple derivatives. And then if I were to rank, then Snowflake, then
yeah, I know. Look, I know you guys cannot talk on behalf of others. You can only talk about yourself. My question is, why aren't Cathie selling it? Aunt Cathie was so bullish on Palantir, right? When the IPO came, she bought. I know, Sachin, you have a view on this because you've done a couple of videos, and I think one or two questions, and then I'm done with you guys. So why is she selling it? I mean, she bought 41 or something, for 39. I mean, that's like insane price.
She was buying a lot last year. I mean, let's say in 20s, and the last buy she made for Palantir was in $16 to $18.
Okay.
So, like I discussed before, I mean, like if you take that, ARK Invest says that they have a hurdle rate of 15% for 5 years, which means that the company has to grow 2 times of size at least. That's the hurdle rate. They expect better than that. So, which says that when they were doing at $16 to $18, they expected Palantir to go in 5 years at least $70 billion company. That was the view they had in mid-January. Okay, that was. Now they are selling it when it is in the range of 10.5, 11. So what they are telling now, if I use the same frame, that they expect Palantir to be less than valuation of $44 billion by the same period. So their valuation has changed by half in the span of 3 weeks. And on the basis of what? They said on the basis of the government revenue decline. I'm sorry, but that's not what Cathie said in the thesis of Palantir. She said the thesis of Palantir is based on that the company is investing in long term and they can actually steal the market of AWS, which is commercial. So now when I look at commercially what Palantir is doing, commercially they are doing pretty good. So what Cathie is saying and what Cathie is doing, there is a gap in that. Okay, I mean, I'm a fund advisor. Okay, so I know up to a certain extent how fund works. Okay, though still it's new to me. See, the only thing that a fund manager care more than the performance is assets under management. And in ETF, you do not get paid on performance like you get in hedge funds. In ETF, you only get paid in terms of the fees, which is 0.75%, I believe in her case on the annualized basis, on the total asset under management. Now, if you have seen 50% outflows from your fund and your fund has also, or your ETF has also declined by more than 50%, then effectively your take home salaries and bonus are impacted by 75%. And this is what the pain point, and this is what Cathie is trying, that she's trying to arrest the decline. I mean, she's facing a lot of heat from the media. I think something is getting under the skin. And at the end of the day, what she's trying is that buy something and show something here in shorter interval to arrest the decline. And she's trying to justify it by her thesis. I'm sorry, thesis of Palantir has not changed. So she has mixed this near-term trading and market timing on weekly basis with a strategy that should be primarily buy and hold. So this is not why people invest money with Cathie. So this is, she's doing something which is not she's mandated to do and fall in a trap where a lot of fund managers actually do. So I feel nothing about in change in my conviction because of Cathie.
And I agree with you. I mean, I think it's her circumstance right now, quite frankly. I mean, it's just a situation she's in, and if she needs to raise cash, she needs to raise cash. And where would they will sell? They need to sell because of your asset management are going down. So I think that's one. I also think it's because I follow her very closely. I think it's also because of I think they rank all of their stocks by conviction and like valuation. So if a stock is relatively super cheap, they're buying more and more of that particular chip because they believe maybe based off the growth rate of that one company being very cheap, they're buying it. So I think what they did, and I think this is what happened, was Roku got now actually I think the price to sales or EV to sales of Roku is
2.5 or something, right? Forward
yeah,
price
exactly. Exactly. Perfect. Exactly. It's like 2 or 3 or whatever. And Palantir is maybe close to 10 or something. So, I mean, the logic, she makes sense. It's like, okay, wow, Roku is cheap. Well, we need cash. And so let's sell this. But I wouldn't be surprised if the market recovers or something, she comes back into Palantir. So I don't think, but yeah, there's so many things happening here. I don't think their fundamental conviction has changed as much. I just think it's the whole game of trading, hedge fund,
Okay.
whatever.
All right. I think, look, you guys have answered all my questions. Just one last is Alex Karp. Is it Alex Karp, right? Alex Karp and Elon and Palantir and Tesla. I mean, a lot of people, a lot of shit I keep hearing is next Tesla or whatever. I mean, nobody knows what's going to happen tomorrow. Nobody expected this interest rate high, this massacre we are having in stock market right now. What's your view on Alex Karp versus Elon? I think both of you, I'm sure, are, and I think Sachin, I've seen you talking about Tesla a lot. Francis, you don't talk so much about Tesla, but I'm sure you know what's happening.
Yeah, so I mean, I'll be very honest on this one, like the way I exactly think. See, Palantir is not Tesla and Alex Karp is not Elon Musk. This is how I think. Okay, I understand and I comply and I accept that this is right, because the reason these two companies are considered in same bracket, because there is a very educated retail following they have, and which try to correct a lot of FUD that is spread by media. So from a retail following perspective point of view, there is a lot of similarity in what is happening. Having said that, guys, go back 17 years in your life and somebody asks you a question, what is easier to do, build a software company or build an EV company? And the answer will, a lot of people will say that building an EV company, good, are you crazy, or building a rocket company. So thinking from that point of view, I think what Elon has achieved in terms of execution, it is far beyond what Palantir has done at this particular point. Okay. Another thing is, at the end of the day, I mean, of course, cloud technologies and software technologies had to evolve for Palantir to do what they are doing today, but they are nothing in comparison to what supply chain for EV had to come up. I mean, Elon has to do entirely all of this by his own for a long time before anybody was interested. While Palantir was also benefited by the research that has been done by the open source community. And for example, now if Palantir has to sell 20 new clients, see, at the end of the day, plumbing is already there. But if Elon has to open another giga factory, I mean, he has to put a lot of things. So we have to actually appreciate that though Palantir is quite a great company and a good company, okay, and in terms of retail behavior, they are pretty much same. And that's where I would say that the comparison ends. Okay. Everything else, I think Tesla is a whole different league compared to Palantir. I would expect even like Palantir tomorrow become even as big as Google, I will still keep Tesla and Elon
different level,
a league higher. I mean, what they have done and what they have achieved. We all saw that recent tweet that Elon mentioned about his lunch with Munger. Okay, and Munger was telling like all the different ways Tesla can fail. And this is, I mean, I spend a lot of time with these smart executive, and a lot of time they tell me, okay, why this will not work and why that will not work. We should not try those. We should try tested. I said, if we are all going to try tested things, then why we are even discussing about disruption and innovation? And this was one of the key reasons for me in the corporate circle that I kind of started having a very vocal kind of presence, that I was saying things with a lot of people were uncomfortable. It built a certain kind of brand, but it also gave me, like a thinking that I need to go to the channels and manuals where this thinking is actually more open. So this is why, I mean, Alex Karp is amazing guy. He's amazing CEO. I mean, the kind of integrity and philosophical issues he has to deal.
That's what he has.
He is right for that. Okay. But Elon, I mean, is a whole different level. I mean, Elon to me is bigger than what Steve Jobs was. So, I mean, it's a whole different level.
It's a different league. What do you think, Francis?
You know, I totally echo. I don't have much to add to Sachin, really. I mean, Elon is just, I mean, what Elon has done is phenomenal. I mean, he almost beat the companies were over $600 billion or close to, I mean, it was at one point a $1 trillion company. I mean, Alex Karp, he partnered with Peter Thiel, Elon. There's a group of them. I can't recall all of the co-founders of Palantir, right? So there's a core group of Palantir, and I think Peter Thiel also played a key role in the building of Palantir. However, I mean, we know Elon and maybe just a few, but Elon was the key guy. So no doubt. Palantir still has to prove itself. I mean, it's only a 20 billion. How much? 20 billion, $22 billion company.
Pretty small, right?
Yeah, so they still have a long way to prove themselves, but Elon has built a 600 and something billion company. So I mean, yeah, you can't.
And you know, I will tell you one big difference between Alex Karp and Elon. Elon has a 28-year-old girlfriend now, the new one, and Alex Karp doesn't have.
Are you sure Alex isn't married?
I don't know what.
No, I don't think he is married.
Okay. I mean, really?
I don't think he is married. I mean, like last I checked, he was. He wasn't married. I mean, I may be wrong, but that's what I last checked. I mean, I do quite a research about especially the management when I'm trying to open an investment. And I was working on this piece, like why? Because a lot of people have asked me this thing, like this is Tesla versus Palantir. And being somebody who is bull in Palantir, I think a lot of people expect me to say that Palantir is the next Tesla. Sometime in a moment of thought, I think like that in the impact because I'm biased by it. But when I take a step back, that's what when I take a step back and try to think it strategically and objective. I mean, I would rate Alex Karp and Palantir mission way above a lot of companies. But when it comes to Tesla, Elon and SpaceX, I mean, that's a whole different league. And I mean, I cannot do that.
So on that note, I think I'll finish. And congrats, Sachin. You missed out on Tesla, but you made 3x on SpaceX so far. I mean, good things will come to you again. More.
It's still paper money, and I hope SpaceX doesn't come
public in this
environment. But in SpaceX is one company. Now, even in this sentiment, if it comes public, I think it will still survive. But any other company like Klarna, I mean, I'm now sitting almost like 11x, 12x. I mean, if Klarna goes to public right now, I mean, my 11x will go to 2x.
No, let's not. We'll hope that it doesn't go public. Okay, gentlemen, thank you so much. I really appreciate your time.
Thank you.
Some interesting stuff, some very valuable stuff. I learned it. I'm sure subscribers the people who watch will learn it. So thank you guys.
Absolutely.
Let's reconnect sometime soon. Cheers. Take care.
Bye-bye. Absolutely. Take care.
Good to see you, Rajiv. Good to see you, Francis.
Good to see you.
You too. Bye-bye.
Bye.